Well, here we go. Episode 14 of the What Do We Do podcast. Kyle Bogey, Dewey Stefan here with you, and a lot to discuss on this episode. A busy month of August coming to a close here for the stock market, Dewey.
Absolutely. Hello, everyone, and welcome to episode 14. Summer's still here, but slowly but surely I see the leaves turning, brown. That tells me that autumn is on the way. But let's take advantage of the days of summer, and August, closed out yesterday, and I guess that's what we're going to start talking about today.
Yeah, so we got a busy day on the stock market. We got a couple of different things happening out there as well, including a couple of companies that are splitting. Also have 3 companies into the Dow, 3 companies going out. I can't wait to find out what the heck that actually means. And we'll start here with word on the street, okay? And you can confirm this for me if you would like. Okay, word on the street.
Is that Wall Street or Main Street?
That is Main Street.
Okay.
We'll go with that, okay? I mean, you're
checking.
all over Wall Street. We know that.
Okay.
But word on Main Street is I actually happen to share a birthday with a younger version of a Stefan out there. Is that correct?
You heard correctly, Kyle. My oldest son, Jackson, has the same birthday as you, and that was last Friday, August 28th. So a great big belated booyah. Happy birthday to you, and also to my oldest Jackson, who turned 17.
See, now I'm only slightly older, but if you had to say who's more mature, your son Jackson or me?
Well, again, I don't know you that well. I've known him for 17 years. He is an amazing young man, but I think before the podcast, I was telling you that, he probably thinks he's a little bit older than he is, and maybe you think you're a little bit or act a little bit younger than you are. I think that's a little joke, but you're an amazing guy, and he's an amazing young man. So happy birthday to you both.
And one more quick birthday shout-out, somebody I know that you very much look up to, and we've talked about him quite a bit on the podcast because of obviously the success that he has had in the world of business and in the market, and that is Mr. Warren Buffett.
Mr. Buffett, a.k.a. the Oracle of Omaha. This guy is a living legend. Mr. Buffett turned 90 years young on Sunday, August 30th, so we want to wish him also a great big booyah birthday to ya. And I've got 2 quotes for you today, Kyle, from Mr. Buffett.
You're all about the Buffett quotes. I love it.
Are you ready for these?
Absolutely.
The first one is one that you probably wouldn't see coming from me today, but it's all about the love. Mr. Buffett is quoted as saying, "Love is the best way to measure your success in life." So before we get into money and everything else today, let's just take a quick moment and listen and reflect that love is the best way to measure your success in life, according to the one and only Warren Buffett.
I wonder if he would feel the same way if he didn't have billions of dollars. I don't know. I'm just wondering.
Well, if you study him, I think he would. There are some others out there, maybe not so much. But with Mr. Buffett, God bless you, and hopefully you got 90 more years in you, my man. The other quote that we will kind of segue into today's podcast with from the Oracle of Omaha is the following. Are you ready for this? Drum roll, please.
Hit me.
I will tell you how to become rich. Be fearful when others are greedy. Be greedy when others are fearful. Period. Mr. Buffett, you couldn't be more spot on. And when the market, again, is extremely excited, he's saying just be a little bit more cautious. And when everyone else is a little panicked, maybe that's the time to be a little bit excited, right? So anyway, that's a good transition or a good segue in thinking to what's going on with the markets.
Yeah, let's go ahead and jump in on that because, the month of August was interesting, back and forth, up and down. How I guess would you best describe what we saw from the market as we close out the month of August?
Well, before we get there, we're going to talk about the crazy day yesterday. To end the month of August, we had, as you said in the opening, Apple stock split 4-for-1. Tesla stock split 5-for-1. 3 components of the Dow Jones Industrial Average were removed, and 3 components of the Dow Jones Industrial Average were then added. That's a breathtaking, that's a full year. Yet it was one day yesterday. So let's start there, and then we'll wrap up with how the month ended.
See, I can tell, just in the way that you're describing it, how big it is in your world. Yeah. Me, it's like you're speaking a different language, with what you're talking about. So let's, I guess, do you want to start with Apple perhaps here and kind of get an understanding of what exactly that means? You said they split 4-to-1.
That's right.
I believe in Tesla's 5-to-1. So with
right.
Apple, in general, what is splitting within the market even mean?
Yeah, that's a great question, and let's take a step back and explain it to our podcast listeners, right?
And me.
And you. And let's say hello to Mike Sullivan, a.k.a. Sully, behind the scenes, running the producing keyboard, whatever that thing's called. Sully, good to see you today, and thanks for running the show. As it relates to a stock split, okay, all it means is that if you have something that is worth $10 a share and you have one share, okay, so you have one share and it's worth $10. You follow me?
Yep.
If they do a 2-for-1 stock split, they want to do 2 things. Typically, the company does this, and the company wants to typically do one thing. They want to get the share price lower and allow people who may not be able to pay $10 a share the opportunity to buy their stock, because now it's $5 a share. So when the split happens, and they also might just want more shares to be available because they have to do some other financing and some other investment banking things. But all that to say, if you have one share at $10, okay, and then it splits, you simply have 2 shares at $5. Does that make sense?
Okay, yeah, sure.
Okay, so that's really all that happened yesterday with Apple and Tesla, but it wasn't a $10 stock going to $5. Apple was actually around $500, and so by splitting 4-to-1 on the spot, can you do the math? What would you say the share price would be, again, starting yesterday after the split? 500.
Yeah, 125, right?
You got it.
Yeah.
Ding, ding, ding. There's that higher education for you. So now there's 4 times as many shares out there at $125 a share. So again, it may make it so that other individual investors or people that maybe couldn't pay $500 a share, may be able to pay $125 a share.
And that just seems like good business. Essentially being able to reach a different, segment of buyer.
So you would think so. But here's the problem, and this is in today's day and age, I guess it's a perfect conversation to have. The lower your stock price is, the more people have access to it, as you said, right? So with that, though, day traders, or what they call the retail public investor, the non-sophisticated, the more the traders will get in and get out and get in and get out. And so if something is $500 a share, you might just buy it and want to hold it, right? Again, Apple, was way, 100 a share, split adjusted, 50 a share, right? So these things appreciate exponentially, and that's why these splits happen. But some companies in the past decade have said, we don't want to split because we don't want the retail individual day trading investor to buy and sell our stock all day, because then the stock price fluctuates more. And when you're going to buy a building or use your company assets, your stock price, to do a deal, and you don't know if it's up or down, you, again, maybe don't want the individual investor to be so accessible to it.
See, that's interesting. And, I'll just spring this on you, so answer it however you will. But, the day trading has gone, it seems, way up over the last several months throughout this pandemic. Sports obviously weren't around, so the sports bettors out there were getting involved in day trading, and that most companies are not exactly thrilled about that. Has that contributed, I guess, to some of the volatility, the up and down that we've seen?
Absolutely. Absolutely. And some investment companies out there, I think Fidelity and maybe Charles Schwab, have now figured out a way where you can buy a fraction of a share. So if there is a stock, let's say Alphabet, which is Google, let's say it's 1,600 a share, or Amazon is over 3,000 a share, right? You can now buy, 1/10 of a share of Amazon for $300 a share, through, this brokerage firm. So there is absolutely, two arguments to be had inside. The company ultimately decides. You can actually do a reverse split. If your stock is $5 a share, you could wave your magic wand, have your board approve it, and you could all of a sudden make it worth $50 a share and just have, the number of shares reduced by tenfold also. So you can do it both ways. But in this case, Apple was up 18% in August alone. So again, it's having an amazing year, and they have split their stock in the past. So this is nothing new for them to do. And when the company is up 70% on the year, as it is, it's also the highest valued company in the world currently, surpassing $2 trillion in market cap. Unbelievable. And the stock is now $125 a share.
So as far as outlook, obviously it's going to take some time to figure out how this will benefit, how this could potentially impact what Apple is going to be doing. But, is there, I guess, an estimate or a projection for where this is going to take them or what it could potentially do?
So no. So that's just So the other part of a split means that the price comes down and there's twice as many shares if it's a 2-to-1 split, right? In this case, the price came down by 4 and there's 4 times as many shares, right?
Yep.
You can liken it to if you have $5 in your pocket and it's a $5 bill, and you go and you exchange it for 5 $1 bills, right? You still just have $5. Okay, so nothing really happens. However, you do think that because the share price is lower, more investors will now get in there, and that will, buyers versus sellers is what moves the stock up or down. So if there's more buyers, people want to buy it while it's lower, and no one's going to sell it because I would have sold it when it was higher, even though it's the same. I would have sold it at 500. I'm not going to sell it at 125, right? So all that to say that you would think that the stock would go up because of the split. And in the short run, sometimes that's what the company is hoping for also. That's why they're doing it. I'm not really sure that that's Apple's intent at all. However, historically, after a split, stocks go down for whether it's 1 month to 3 months to longer. So historically, it actually has the inverse effect than you would think. However, with what happened yesterday and what has been happening the last few months with stocks splitting, besides these two today we're talking about, Apple and then also Tesla we'll talk about, these have actually appreciated post-split. And it's not necessarily scratching people's heads, but it is making us extremely, extremely cautious as this price goes up.
You said, or at least you alluded to, not knowing what Apple's motive was for doing this. I guess before we get into Tesla and take a look at what's going on with them as well, because they made a similar decision. What do you think the motive is for Apple? One of the most powerful companies out there.
Yeah, I have no idea. I would have to be more of an expert on the Apple stock.
Sure.
They've split in the past, but it's something that they, again, thought long and hard and made that decision for their strategic initiatives, whatever they are, right? However, I will tell you, and this is a great segue to the next stock split, Tesla, I will tell you that I have a pretty confident understanding of why they split their shares yesterday. And so Tesla shares split 5-to-1, and I'm happy to tell you, opine, there's a good word for you, opine. I'm happy to opine, my thoughts on that.
All right, so what do you think ended up happening? What caused Tesla to split as well? You said 5-to-1 split. Apple was 4-to-1. Tesla, obviously an intriguing company for a lot of different reasons.
So Tesla was $2,200 a share on Friday before it split.
That's insane.
Can you believe that?
That's crazy.
And go back to last year, just again, a year ago, the stock was maybe $400, maybe even $200. I don't have the stock charting system up in front of me, but can you imagine that run up, right? Tesla, now, the stock price, as it is with the number of shares that are out there, is more valuable and has a larger market cap than Ford, the Fiat Chrysler, and General Motors brand combined. And you could throw in some other automakers in there. So Tesla is more valuable in terms of its company than all of these other traditional automakers. Is that a little
What-
bit curious?
Why? Yeah. Why is that though? I mean, is there actually a reason? I mean, we can all speculate.
So yes, because again, you're trying to invest for the future growth of something versus the income of something if it pays a dividend. Obviously, we talked about that in a prior episode. So the hype behind Tesla this whole year, and actually kind of starting last fall, was that they're the electric car is the car of the future. Tesla also with Elon Musk, who, by the way, because of the stock run up, went from being just, I hate to say it, just a billionaire, maybe worth, 10 or 15 billion dollars.
Oh, that's it.
That's
Oh.
it. Well, with this run up in the stock price, as of Friday, his net worth went over $100 billion. So he is in the centibillionaire club. And, that's according to the Bloomberg's Billionaire Index.
Where do they all hang out? Is there like a specific building or club
Yeah.
or like private membership you can get when you join the club?
Yeah, let's go find it and hang out, right? Let's just see. And again, seriously, there are reasons that you would want to hang out and just listen to them.
Hey guys, it's Bogey. I want to take a second to talk to you about Dewey Steffen and his excellent team at Great Lakes Wealth. Look, do you feel overwhelmed with managing your assets in today's financial world? How could you not? I mean, think about the times we're in here in 2020. Do you want financial freedom? Great Lakes Wealth offers Wall Street solutions with Main Street values. They sit down with you to develop custom financial solutions utilizing all of your assets, even your 401k. We build the future you want based on your goals and your dreams. That's what Great Lakes Wealth is all about. Thinking about you, thinking about your family, and thinking about your future. Simply go to greatlakeswealth.us to schedule an appointment today. They offer better investments, better service, and a fee-back guarantee. That's right, a fee-back guarantee. Okay, a fee-back guarantee. I'll say it one more time for you if you didn't hear it. Your road to financial freedom starts at greatlakeswealth.us. Please visit greatlakeswealth.us or simply give Great Lakes Wealth a call today.
Just absorb what they have to say. I mean, it's, Jeff Bezos, certainly Elon Musk, certainly Warren Buffett we talked about, and a host of others for sure. So it's exciting times. But the 5-for-1 split on Tesla takes the stock down to a very manageable $440 a share for those investors, that are interested. And again, it comes down to my thoughts on it. At $2,200 a share with a company that, again, doesn't really have the current earnings, and there aren't that many Teslas on the road, and so the actual number of units and the actual revenues today are not why the stock is $440 a share now. It's because of the future growth, future opportunities versus your General Motors, your Ford, some others that they're going to be around, they're doing their thing, but they're just kind of refining what they've already got, if you will. That's kind of the thought on Wall Street. And you have some other analysts out there that'll tell you, if you don't have earnings and you don't have the growth, if there's a situation that evolves, these are the ones that come plummeting down the most, are the ones that can't back it up with dividends or cash in the bank.
So at what point, I guess, would that have to change for Tesla for things to really increase and continue to stay, I suppose, at the pace that they're currently on?
They need to sell some cars, Bogey. They need to sell some cars. And so we're excited just to see where it goes and what happens to it. Amazon.com, when it first came out, they were growing and they didn't really have the revenues. Now all of a sudden we see 10 years later, they are growing and they have the revenues. And so Tesla, you have a camp out there that says it's the most overvalued stock that you could find. Maybe that's why they split the share price to kind of give it a little bit more access to investors. But you have other professional investors that'll tell you you have no idea what Elon Musk and the entire Tesla company, can do.
What would you say about it?
We actually don't have an opinion on it. We believe it's extremely high risk. We have not taken a position in Tesla at the firm since we've been open. We watch it, but it's something where, we kind of go back to like the Warren Buffett school, where if you don't know what something does, and this is actually Peter Lynch, who was an investment professional at Fidelity, if you're not really sure what something does, then, do you really want to be, investing in it? We do have a position in Apple. Certainly we've had Apple as a core holding for quite a long time, and that will continue. We call it the Apple ecosystem.
So right now, if you're somebody out there who has, a little bit of money set aside, you're thinking about potentially, putting it into the market, and you're talking about Tesla, okay, especially after they just had this split, 5-1 split, right? Would you say that this would be more of a long-term, type of play where, you know what, okay, if you feel comfortable, go ahead, or is this more of a short-term? Because, I mean, it's amazing the growth that they've had over the last 12 months, to go from, like you said, 400, maybe 200 a share to now 2,200 before this split. Is it short-term or is it long-term right now based on what you think?
So I would tell you anything that you're investing in should be long term. So one of the reasons we haven't invested in it because it just keeps going up, keeps going up, keeps going up. And from the work that we do, we don't really understand how it can be appreciating at the level it is. So again, you can't get them all right, and again, a broken clock is worth, a broken clock is right twice a day. This may be the opportunity of a lifetime. Still, some professionals say Tesla, like we are here, just getting started, right? But there are probably, well, I can say there are definitely other stocks that we would be investing in at this moment and at this juncture, way ahead of what we would do with Tesla. Absolutely.
Anything else critical that you think should be noted or pointed out about splits within the stock market? What to pay attention to, what not?
Just that again, just because it splits, if you had $5 and it splits 5 for 1, you still have $5. You just have 5 of $1 versus 1 of $5. So don't get hyped up about any split that happens. And again, historically, the split post-split, usually the prices do come down. This is an extremely different environment, market 2020. I think I'm just going to change it from COVID 2020 or COVID-19 in 2020 to just the market 2020 because of where we're at now. But I think it's a good transition to the 3 stocks that have been removed from the Dow and the 3 stocks that have been added to the Dow, because actually there is some thought that the reason that these components were deleted and the new ones added was because of the Apple split. So there's a little twist on Apple split, we think kind of pushed the Dow Jones Industrial Average, the company that is behind it, to make their moves either before they were going to or just facilitated them happening, yesterday.
Okay, so as if Apple and Tesla splitting wasn't enough, the 3 companies that left, 3 companies that are now in to the Dow, that just another, again, remarkable day as far as the amount of movement and things that are going on. You say 3 different stocks were deleted. Now, I'm looking at my iPad right now, and I'm going, okay, so you just put the little scroll right next to it, hit delete, and that's what happened. What does that mean when a stock gets deleted from the Dow?
Well, it gets removed. Yeah, so
Okay.
maybe delete's not the right word. I mean, it actually is the right word, but they're removed. So there's only 30 stocks in the Dow. We tried this before, right?
Yep.
So they could remove companies that they don't believe are worthwhile. Remember the other episode you said the Dow is the creme de la creme. That's the big dog out there is the Dow Jones, right? So if that's the case, there were 3 components that they just didn't feel were up to the snuff of being in the Dow.
So when that happens, where do those 3 go?
So they're just still in the stock market, and they may be in the S&P 500. They're still there. They're just not in that elite group. They're just removed from, you could...
walking away in shame.
Well,
I'm
again,
kidding.
so there are all these other Wall Street phenomenons. But before we get into that, I'll say that, again, with Apple's stock split, the Dow Jones Industrial Average is a price-weighted index. Okay, so the price of the shares. So by the shares being reduced by 4, that makes the tech weighting in the index less. Okay, so not a full 75% less or whatever because of the dilution, but it makes the tech weighting in the Dow less. So we believe that the Dow Jones Industrial Average had to add another tech name, as well as just maneuver its its internal indices to more reflect what's going on today. So again, that's kind of where the Dow kind of took the lead from Apple splitting to kind of make the decisions that they made. And this is the first what's the right word? This is the first rebalancing, if you will, of the Dow in 7 years. And one of the components that was removed was actually the oldest component in the Dow. So it's kind of like, you kicking your great-great-great-grandfather out of your house after all these years, bringing in a young gun, bring in the lefty, and you send great-grandpa out to pasture. Do you have any?
People just have no respect for their elders anymore.
Well, I mean, to say times change. You got to, keep up with the times. But any idea if I gave you a quick on the fly question of quiz, which company would you think that is that was in the Dow that just was removed yesterday?
Dunder Mifflin? No, I have no idea.
No problem. You don't need
Paper's on the way out. I mean,
Yeah.
paper company.
Well,
maybe.
have you heard of an oil company called ExxonMobil?
I have.
ExxonMobil was the company that was removed yesterday. It was the longest remaining component of the Dow prior. It joined the Dow Jones Industrial Average back in 1928. 1928, right?
Almost 100 years. Man, just before they were going to celebrate their 100th anniversary.
Well,
just cold-blooded, the Dow is.
Well, that's it. And believe it or not, ExxonMobil stock price, was, let's say, 90 or 100 a share, last year, whatever. They did not do a split.
Went down to nothing this past year, didn't it?
Not ExxonMobil, the
No,
oil
the oil industry.
Oil
Gotcha.
index. We'll talk about the oil index towards the end when we do a recap. But no, oil went minus. The barrel price went minus for a split hot second there. But ExxonMobil was actually the largest company in the world, as we just talked about. Apple is now. ExxonMobil was the largest company in the world as recently as 2011. So when you talk about a fall from grace, ExxonMobil was the big dog back in 2011, and today again they're still very, very necessary. They're very, very relevant, but they were removed, and it's something that. Again, I guess you call it a fall from grace, or it's just something that happened, and we're going to move on with it.
What is the projection, I guess, for Exxon at this point? I mean, you say they stay in the stock market, but they have gone way down even over the last 9 years, as you just described, from 2011, the big dog, to now 2020. They're retired and limping off, a little bit. What does that mean that it's not going to be a quality investment moving forward? Is it something to be leery of? I guess what does it mean overall?
Well, I tell you, what a meatball layup, softball across the plate, whatever that is, bogey. There's another adage out there on Wall Street that when these transitions happen, as we talked about splits, and people think that the split price is going to help you and you should buy the split, and historically the new companies that have split, they go down in price, right? So you kind of scratch your head and wish you hadn't bought the hype of the split. Well, with the removal of components of the Dow, it's basically the same thing. It's backwards. So companies that get removed from the Dow typically have a better year the 12 months following their removal than the 12 months following the addition of the new stock, right? So once you're out of the Dow, you typically do better as a stock than those three or whatever, than the company that got, replaced you. So
does that go back to the Warren Buffett quote about, when people are greedy, be fearful. When people are fearful, perhaps be greedy? Little bit? No.
It has nothing to do with it at all. I don't know what the correlation is, but no, it just has to do that I think people do a lot of research on something, or maybe the Dow Jones Industrial Average is setting up, its index for a future, decade or a future period of time, and components and sector evaluations. But for whatever reason, these stocks tend to do better after they're removed for, again, the next 12 months. Sometimes they continue to integrate, becoming great again. Other times they do fall down and other things happen. But it's exciting that it's ExxonMobil. And I was going to say a few minutes ago, kind of a little tongue in cheek, ExxonMobil didn't do a stock split, this year, but the stock went from basically, 90 down to 40. So it basically is down over 50% without having a stock split. That's kind of tough, especially when you do have the Dow Jones back to positive on the year. You mentioned that in a prior episode. It was just about there, highs back to February, and you have the NASDAQ and the S&P that are now back to all-time highs. This crazy COVID-19 situation continues. The other two components that were removed, one is not a biotech, one is a pharmaceutical company called Pfizer. You familiar with Pfizer?
Absolutely.
Pfizer had only been in since 2014. So there's another adage like keep them on a short leash. I mean, any given time to get settled. They just joined the index 6 years ago, and you're out.
And then bam, pink slip.
You're pink slip, right? So Pfizer, which is a very large pharmaceutical company, has that in there, and that's very important. But they were removed. And then Raytheon Technologies, which is a spin-off and a merger from a bunch of different companies over the last decade. It was actually in there since 1939 as well. So it had a long history of being in the Dow. Any questions on that?
Yeah, I guess to kind of wrap a bow around this, you said that this is the first time that companies have been removed from the Dow in 7 years. Is that correct? Did I pick up on that?
Yep, this is the first restructuring of the index in 7 years.
Is that relatively normal, or is that actually an oddity that it was 7 years before something like this ended up happening? I guess how often does a situation like this transpire?
That I don't know. I didn't do all the history on that. I didn't check, but we will be happy to do a little more research and get back to you. It doesn't happen very frequently. I think it's every 5 to 10 years something happens, and again, a lot of it has to do based upon a stock reason. There's a stock that needs to be added for some reason, they believe, or there's a stock that needs to be removed for some reason, they believe, right? And I know that we're getting kind of long with the time, but I want to talk about the 3 that got added. Let's talk about these new up-and-coming stars. So
big day for them, yeah.
Big day for them.
5-star recruits signing their national letter of intent.
5-star recruits, you got that right. And one of them is a software company, which is Salesforce.com. Have you heard of this company?
I believe I have, actually.
Okay, well, Salesforce.com is kind of a newer company. They actually just built a beautiful tower in San Francisco, California, the Salesforce.com tower. Take a look on that. Take a look at that when you ever get back on a plane and head out that way.
Will do. Writing it down right now.
What's kind of cool about that, though, is Salesforce.com, right? Salesforce.com. Mm-hmm. Their ticker symbol is CRM. CRM. Does that even relate to Salesforce.com?
Doesn't seem like it.
Okay. Well, so it has to do with the fact that it's client management, data management, right? Mm. So the CRM system, have you heard of that? Mm-hmm. So CRM is what Salesforce.com does. So they have their ticker symbol as CRM. Another one that was added is a biotech company, which is Amgen, AMGN. So Amgen is the name of the company. The ticker symbol is AMGN. That kind of makes sense. It's Amgen, short.
Works just perfect,
right? And they have been around, for decades. They're one of the largest biotech companies out there, and so we're very familiar with them and what they do. And the third one that was added, you're probably very familiar with also, at least by name, which is Honeywell. Familiar with Honeywell? Mm-hmm. Honeywell's an industrial company, and whether they're doing heating and cooling systems, or components. Honeywell, their ticker symbol is HON. Harry, Oscar, Nancy. So again, makes some sense, but I'll just go back to Salesforce.com, ticker symbol CRM, not your usual ticker symbol relative to the name of your stock. All those to say, we do have full disclosure. We do have a position in ExxonMobil. We do have a position in Salesforce.com, and we do not have a position currently in Amgen or Honeywell or Pfizer or Raytheon. We also, as a firm, do have a position in Apple, but not Tesla, as we mentioned earlier.
Very exciting stuff. All right, well, that'll do it for episode 14. And I just want to make sure we make a quick note here. Episode 13, the most downloaded episode that we have had yet on the What Do We Do podcast. Again, completely brought to you by Great Lakes Wealth and Dewey Steffen's wonderful team here. So let's continue that momentum here with episode 14. Please continue to download, subscribe, share, and rate here moving forward.
This was a great episode. We're excited for the next episode. Next week, Tuesday after Labor Day, we are into September, Bogey. So we are going to be talking about earnings in the month of, I take that back. We are going to be talking about the fall and getting ready for earnings, but also getting ready for the election. So we've got a lot ahead of us. And as we always say, we're just getting started.
The opinions expressed in this program are for general information purposes only and are not intended to provide specific advice or recommendations for any individual or any specific security. It's only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risks and possible loss of principal capital. Please seek advice from a licensed professional.